I know we've been seeing a lot of falling knives in the past month or so, but we might be approaching a bottom soon. Or at least we were until I just read that we're going to have additional tariffs being announced as part of a reciprocal tariff plan. This video is not financial advice, nor is it a recommendation. Please do your own due diligence before investing into anything. Now, while this is not so good for all the shares of stocks or shares of ETFs you currently own, this might be a chance to stop dripping your dividends for a little bit to raise some capital so that once we do hit a bottom, you can get some shares on sale. As we can see, the QQQ and anything else that trades against it, the S&P and whatever else trades against it is all going down. We just saw our first bounce, so prior to this announcement, it looked like we were getting kind of close to the bottom, but we might be going down a bit further. For a weekly dividend ETF, this might be a good chance for maybe one or two or more dividends that you can just hold back, save that cash if you're not using it for anything else, and wait until you see a buying opportunity, which might be coming pretty soon. That said, for those of you who watched this long, I'm going to give you some other strategies you could employ in this time if you're certain that the NASDAQ or the S&P are going to continue to go down further. Now, being that a lot of you here on this channel are into YieldMax or other high-yield dividend stocks, I would say maybe don't go toward the short ETF side of YieldMax because even though, yes, it does operate in an inverse, you're still not going to make as much money as if you do this other strategy, I would say, which is to use inverse ETFs. Not the short ETFs from YieldMax, but things like SQQQ, which is a 3x leverage against the QQQ, or SPXU, which is 3x leverage against the S&P. Again, only use those if you are certain that the market is going to continue to go down. Or you could instead decide to buy puts against certain ETFs you already hold, like QDTE, QYLD even, you could do that as well. Even if you don't sell your shares, the put itself will increase in value and you could just sell the put contract whenever it goes in the money, or maybe you're buying it in the money and it goes deeper in the money. No matter what, there is always an opportunity somewhere in the market. Which strategy, if any, are you going to employ during this downtime? If you like this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell for notifications so you don't miss a single video.